What is up, everybody, and welcome to Futures Trading with the NinjaTrader, where every Monday we talk about the futures market, the copper, Bitcoin, corn, gold, you name it. We go ahead and check it out. So without further ado, let's get into futures trading. And of course, it's not futures trading if we don't have Jim Cagnina, senior education and training specialist over at NinjaTrader. I heard you went to the beach. You got a little tan?
You know, I'm one of those guys that wears a long sleeve shirt, more sunscreen you can imagine, and a hoodie. I'm not getting a tan, but I enjoyed myself. It was beautiful.
You know, I was told that I need to wear sunscreen even if I'm not going like to the beach. And I'm like, people wear sunscreen. They're like, yeah, like even if you're going for like a little walk or a workout, you should be wearing sunscreen. And I'm like, I didn't know that for 30 years of my life, but you know, I guess that's the tip of the week from my end to everyone watching. But Jim, let's get right to it, man. What you got on your screen right now?
So E-mini S&P right now making new lows on the day. Remember, this is kind of an odd day in the U.S. because it's a holiday, kind of. We have banks are closed. We have the bond market not open, the cash bond market not open, but the stock market is open. The futures markets are almost always open. So it's a little bit of an odd day with respect to institutional investors and that kind of thing.
Yeah, I mean, you and I were talking about, hey, we're going to do the show or what? And then obviously we always want to do the show if we possibly can. Do you have any trade setups that you have in mind? I do see that you've got, I'm trying to see what you're short there, but I can't actually see
So
it.
I'm going to move over. So I have a really bad trade idea that was percolating earlier. This is a Russell 2000. Now, my theory here is the Russell 2000 is going to be the strongest of the stock index futures because it's small cap stock. There's 2,000 in the index. They're probably a little bit less sensitive to this international stress that we see going on. You know, strong U.S. dollar, war raging, all this stressors. So it'll be should perform a little better overall. I don't know for sure, but that's what I'm thinking. So I did a counter trend trade earlier. We're long right exactly where we're at here. And what I did was I marked off an area of what I consider some really strong support. So 1, 2, 3 times we tried to get in it. We're still trying to get in it. And I put my sell stop my stop loss, right below the rectangle. If I'm wrong, I don't want to have an unlimited downside here. I want to get out, right? So that's what's going on right now. Trade's not looking really well. It's looking like it's going to probably go against us, but we're going to hang tight and be patient.
Yeah, we'll see what happens with that trade. And of course, Zen, Paul, appreciate you guys hanging out with us in the chat and all 200 of you as well. Now, let's talk about this. You went ahead and took this trade, and I heard you say something kind of cool. You said, I know where my clear stop is. And it's clear to me, based on your clear stop, that it's right below where you had that support rectangle kind of drawn out around that 1690.80 area.
Yeah, and this rectangle thing I do, it's a visual crutch to me, right? So what I do is I look for the area of time that I'm interested in, and I draw the top of the rectangle to touch the body of the lowest candle I could find, which is right here, right, at 440 to 450. I extended it all the way across. Now, this candle wasn't percolating when I drew the rectangle, right?
Yeah.
And I'm not going to change the rectangle until this candle is completed. So, and then and I drag it down a little bit. So I give myself some distance between the lowest dangling wick and the bottom. And then boom, we have a triple bottom. This is a really nice area of support. And if I'm wrong, as soon as we break out of that rectangle, I'm out, right? If we break out of it, I'm out. It was a bad trade idea. And we go on and look for another trade idea. So right now, we're hanging on by the skin of our teeth a little bit, but that's the idea.
Your risk reward on this was pretty nice too. It looks like you went ahead, if I did my quick math on the spot here, it looks like 8 to the upside and only 5 to the downside. So almost a 2 to 1, but looks like a 1.5 to 1 type trade on your long here as well.
Yeah, and I expect and that's kind of conservative. I think you have that point of control, the volume point of control way up here at 03, which would make a nice target. You have yesterday's point of control, if you can see all the way to the left-hand side, 1707. And when I say yesterday, I mean Friday's session, the previous session.
Yeah.
So this is price happiness right now for the Russell without a lot of news coming. I expect us to trade up in this area again today. I could be wrong, but that's what I expect, just in anticipation of the rest of the week, which is going to be maybe Armageddon. I don't know.
Yeah, yeah, well, it's CBD, but it's interesting though because we talk about how support and resistance isn't just one particular spot price point; it's an area, and you can see that right now, even though it broke the wick to the bottom of the previous support area, it stayed within that rectangle, and now you got yourself a little bit of a bounce at almost a break even on that trade. But cool, let's go ahead and get away from the Russell. We'll definitely come back and take this one and come back to it. Assume you're going to get a notification if something fails one way or another.
Yeah, for sure. And one more point on this,
What's
if I
up?
could just if I could just speak British for a second, the really keen thing about this particular market is there's a micro contract as well. It's 1/10 the size. So it gives folks with smaller account sizes, the ability to be patient like I'm being, right? I know I'm in a real-time simulated live account, but I'm trying to express a trade as I would do it. And I'm patient now, right? And I could be patient. So the micros or the classic gives you that opportunity. Sorry, I just threw a plug in for the micros.
No, no, I'm glad you mentioned that. Obviously, look at that. Now you're kind of break even. And that's why it's kind of important to also not just go ahead and say, oh, it's almost hitting my stop loss. I'm just going to go ahead and get out. Another reason it's important to wait for the candle to close because you always go ahead and get yourself a wick, which you can currently see right there. So you're on the 10-minute wick. So you've got about 4 minutes left on this candle here. And you can already see it kind of working in your favor. Now you're green on the trade. So patience is definitely key. And that's why people always ask, they're like, oh, do I wait for the candle to close or is it as soon as it touches and different things like that? I'm going to go ahead and guess you're a wait till it closes kind of guy.
Absolutely. And I'm not touching that stop until a point where, as an example, let's say we rally up to the 61.8%.
Yeah.
And there's a point when I'm going to say, okay, I'm going to move my stop now to break even and let this thing roll. Right. So not yet. I'm going to be patient. I'm not messing with the stop. I'm not messing with the target. Hands are in the pocket. But after this trade matures a little bit and it does go in our favor, hopefully, then I will kind of tighten up the stop.
Well, I got to give you props or credits are due because you almost got stopped out. You held on to it, believed in your conviction, and now you've got yourself almost 2-unit or 2-point move onto the upside. But let's go ahead and check out the ES as we've got SPY breaking to the lows and now just trying to bounce back, but it's still to the downside here. And what do you got? So look at that rectangle again, same area, right? So around that same similar place, which to me translates to approximately the 359 area or so on the SPY. But why is that an area of support for you down there at the blue rectangle?
Well, I drew this because there's a target wick down here, and I love these target wicks. Like here's a target wick. It's a big shadow on a candle just dangling down there, and a lot of times these target wicks get attacked, and it just did. Another target wick, another target wick. So when I'm thinking about entries and exits, I'm like, all right, what am I up against here? And I'm up against this wick, and now the contemporary wick has a target wick also. So again, I'm going to respect that, and I'm going to stay away from it right now. This is looking a lot weaker than the Russell. We have all of these, lower lows and lower highs, and we're still pretty powerful on the downside. The body of the candle. Now, if I was true to my word, and I originally drew my rectangle here, right? The lowest body was way up here. It's touching here. We're trading into it right now. So I'm not going to move the rectangle, but it's looking pretty. This one's looking weaker.
Now you've got the bond market closed because of Indigenous Day, right? And you've got Thanksgiving up in Canada as well. Not that it may have a direct correlation, but just folks are off is what I'm saying. Does that impact your decision making when you're taking a trade on the minis, or is it like business as usual? I'm looking at the levels, I'm looking at my VWAP, and I'm just keeping it moving.
Yeah, so it should be business as usual, but I have a cognitive bias here, and my thought is that a lot of the institutional players might not be participating today. They might take it as a holiday. Banks are closed, bond desks are closed. And as a result, if that's true, we should not have a trend day and we should revert back to where we started from earlier today. And that's why these point of controls today and Friday are kind of important to me later on in the day. Now, I could be totally wrong. We could have a trend day and we could break badly today. But my feeling is we should kind of revert back to a normal distribution on the volume as we get toward the close.
Is there a level where you're like, hey, if this breaks, we're in a trend day, right? So obviously you're looking at the low day at the moment. The previous support could be broken here. If it breaks that, is that a trend day for you, or what are we looking at?
We start approaching S1.
Yeah.
If we break down to S1, then it's bombs away, maybe. I mean, I hope not, but very possible. So I like to use the pivots. I like to use support and resistance pivots as kind of is areas. And you can see this is a big range pivot today because this S1 is way down here at 35, almost, 36 even. We'll round it up just to make it easier in math. But then we'd be down 50 handles. And at that point, yeah, this is a trend day. We're not recovering if we get down here.
Yeah. And of course, the minis are where you have 12.50 per tick. Is that correct?
Yes, sir. Each point is worth $50. It's traded in quarter points. Each quarter point or tick, as you accurately described, is worth $12.50 per contract.
And then if you go to, that's the mini. If you go to the micro, each point is 12.50. Each tick is, what is the math
No.
on
So
that?
everything is 1/10. So you divide by 1/10. So
there you
it's
go. Yeah.
a $5 point and a $1.25 tick.
Yeah. So it's about 312 or so. Yeah. So basically, if you're starting out just in the futures, playing the micros might be the best way to go, as those are only 12.50 per tick there. And then look at that. Same situation as last time that we saw in the Russell, right? Around that rectangle. Yep. You can see a bit of a bounce there to the upside. We'll see if it sustains and if it holds. And if not, because you do have resistance, in my opinion, at least around the 36.30s. And it's not that big of a resistance, though. But you went ahead and moved it down because you saw the wick and you want to adjust it as you go.
Right. So I have a new body of a candle, right? And it's a little bit higher. It's a little bit higher. So I just bumped it up. This is kind of a loosely fitting rectangle here, but bumped it up against it because now we have a new bottom. We have a new low body. So I had to move it down. And that's what I did. We do have a higher high, though, but it's an inside bar right now. We'll see how this thing goes at 11:12 in the morning, East Coast time.
Yeah, we'll go ahead and check it out. Now, are you planning on putting on a trade on the minis at all, or are we just going to focus on the Russell, which I'll get back to here in a minute?
I think this would be a good opportunity, in my opinion, because I know where my stop is. My stop is, a bottom of my rectangle here. Yes, but since we already have one in the Russell, and these things are kind of correlated, I don't want to double expose my stock index future trade, right? So I'm going to focus on the one I have. But we'll do one anyway, just because we can. So again, I would wait for a little bit of, again, we were almost an equal and opposite candle here, the previous one. I try to wait to get halfway into it. Throw it in here right now. If you want to be more patient, you could even lower your entry a little further. So I'm trying to buy the 22 halves with the stop again at the bottom of the rectangle. I'm wrong in 15. So that's what the same kind of trade idea would look like in my mind. And this point of control is a beautiful thing right here, 36.39.
And now you've got a new indicator, at least to me, I don't recall it, is the purple dots. Is that something new, or am I wrong here?
No, I'm trying to. So that's the VWAP. The purple.
That's what I thought. You're just trying to have a different visual for it.
I'm trying to, right. And, it's a cross between what I could see being as old as I am and what the viewers could see being remote on a small screen. So we're experimenting with the purple dots. If you think they suck, excuse my language, I'll come up with something different.
No, I like it. I like it because my VWAP is yellow. On my chart, it's a bold yellow line for the same reason. For me, it's like, hey, I need to see it clearly against price action, and I want the viewers at home, since we stream for them in the mornings, to go ahead and clearly see it as well. I'm taking a quick minute here. Speaking of streaming in the mornings, you guys go ahead and stream futures trading every morning at ninjatrader.com/events. So make sure you guys go ahead and check out NinjaTrader Jim and company there. And then, of course, at the close, you've got something called bars closing as well. What time does that kick off?
That's 3:15 East Coast time. And it's me and Tom Schneider. Same thing we're doing right here. We're literally looking for trade ideas on the close, and we're talking about what happened all day. We're talking about events for tomorrow. We're lining stuff up. It's a lot of fun at the end of the day.
Yeah, and then, of course, this trading platform that you're seeing is NinjaTrader, and the account itself is a simulated trading account. However, the data that you're seeing is in real time, as your Russell trade is almost 5 points in the money there. So we're just about 3 points away from taking profits on that one. While we wait for that to go ahead and execute, whether one way or another, let's talk about gold with everything that's going on. Let's see what the gold price action is. And then, of course, we will go ahead and check out corn and Bitcoin as well. And we will touch the Qs as well. But what you got for me on gold?
All right. So this is gold right now, and again, it's consistent with my long-term bias. My long-term bias is bearish on gold. gold is reacting to a high inflation interest rate environment and a strong U.S. dollar across all the currency pairs. And when that happens, you see corn break. We're down $35 today. We're not trading a 17 handle anymore. We're at 16 handle, and I would be looking for places to sell gold. We cruised. We crushed S1, even though, well, actually, I take that back. S1 was kind of held for a long period of time. Let's just do a rectangle here, just to kind of help my brain a little bit. S1 held a long period of time. We finally crushed it. Then we traded around S2 for a long period of time. Where's S3 at? And S3 is now in play on the downside here at 58. So I am not looking for places to buy gold today.
Well, S1, you say it a long time, but we're talking intraday, right? So it held on for, what is that, 4 hours, give or take? I guess a little bit before, previous day, and you got that. So I'm going to go ahead and call it 4 hours of trading. It went ahead and held and then went to the downside. Now, here, your short would have been, let's say that candle to your, let's say the 4 o'clock candle. Was it the 4 or 4:10?
Let's go. So
4 o'clock. There you go. Boom. So that close below the rectangle would have been your entry. And now your stop loss would have been like the 1696 area, or would you have a different one?
So the stop loss, again, I would have done the same rectangle on the top, right? And I would have said, okay, and I'll try to be a little bit better. This is going to be loosely fitting again. And I said,
I'm just trying to get an idea. Yeah.
Rectangle here, stop. We got yesterday's low. These are 2 areas of interest for me, so, aggressive, conservative, wherever you want to be. That's where the stop would be. If we ended up taking the signal and we went short, and I would look, and the CCI kind of cooperated too, right around this time frame here. The CCI was negative and plunging. So that would have been a good short. I was sleeping, but that would have been a good one.
Yeah, let's go back to your Russell trade. I'm going to answer a question in the chat. We've already talked about it a bunch. I don't want to spend too much time on it. But the reason that we went ahead and played alongside, and I'm going to speak for Jim here, is because you can see the rectangle there. You have support all the way, right? So you've got support where you saw the market bounce twice. So it's more of a risk-reward type trade more than a, hey, we believe this is a bottom, buy, call your grandma and put everything in your 401k. It's more of a, hey, risk reward. Let's see if we can go ahead and get a few points to the upside, which we clearly did. And now what's interesting is that your take profit is right below VWAP. So the market can easily test VWAP, reject it. But hopefully by that time, you've already taken your gains and taken your ball and gone home anyway.
Yeah. And it's, the toughest part right now is not wanting just to break, just get out and take, and take the profit, right? That's the hardest thing. And, sometimes it works your way, sometimes it doesn't. And I'm a fan of being patient. And that's what we're doing right now. Even if it looks like we're giving some stuff back, we're still way positive. Now, the stop, I haven't moved to break even yet, right? I'm going to wait 1 minute and 33 seconds left here and see what this next candle brings us, and then consider whether or not to move it up or not. And if we close above the 61.8% retracement, then I am going to move my stop to break even.
Oh, okay. Interesting. But if it doesn't get there, you're going to go ahead and keep it down.
Hands off.
Got it. Hands off on that one. Now let's go ahead and talk about corn if we can. Or actually, let's take a look at crude oil, especially with the war and things like that. That's always an interesting one for us to go ahead and take. And I see some arrows, which I'm going to assume means you took some trades. Tell me what you see here.
Well, yeah. So I had a bad trade today. Huh? This is, I'll admit it. This little carrot here. I was short 2 units, right? And it was based on some levels that were there. The value area, the point of control, and the VWAP bands. I got a second unit up here into my rectangle, right? So in this case, I used this rectangle on the left-hand side to say, hey, we're going to get into it again, but then I'm going to put my stop above it. And at this point, there was a VWAP band up here where I got stopped out. Right there. And it didn't take too much heat, and a good thing, because look how high we went. We were really far against us. And directionally, you could argue that I was wrong, and I was, right? Again, I just thought, crude, I'm long. This was a counter trend trade for me because I'm bullish on crude in general. But today I felt like we had an opportunity to be range bound and that I would have a short trade idea. It didn't work. That's okay. It happens sometimes. And we're rallying right now. Again, I'd be looking for places to buy again, but I want to respect Friday's and today's point of control. It's a big deal. 93.33 was Friday, and today it's right there. 92.42, almost identical. So it should trade around this. This is a really nice value area. So again, I'd be buying the bottom of the value area, selling the top of the value area, just as a general matter.
And no matter if you're trading crude, corn, Bitcoin, whatever, you're more so of a 10-minute guy than a tick guy, from what I understand. And I think the last time we talked about this, you mentioned that, hey, in your opinion, it's just more about preference and not necessarily a true scientific edge, so to speak.
Well, there's two things there. One is, I know that me and you have a short period of time together to pull off a trade. In the
Yeah.
opening range, I have a short period of time to pull off a trade. So I have a ratio. I have like a 6-to-1 ratio in my head, right? So if I'm making decisions on support and resistance on a 10-minute chart, then I want to be in and out of this trade in less than an hour. If it was going to be a longer term trade idea, maybe let's say I had an hour, I think, well, it's going to be a 6-hour trade, a swing trade all day. So then I would look at an hourly to kind of give my entries. So I think I relate it to my expected duration of the trade.
Okay. Gotcha. So that's what it's
Okay,
about for you. It's like, hey, 6x of the candle that helped me get in the trade is where I want to be to get out. And you are literally less than a point away. And now you're going to ahead and move you up to stop here, as you mentioned you would.
Yeah,
I
a
just want to
couple of
kind of
things.
see this price action and how you get your profit here.
A couple of things here. Now, I move my stop to break even plus a little bit, right? And the
Yeah.
reason is, remember, this is going to act like a market order. We got filled.
Done.
But it's going to act like a market order. So you want to, there's going to be slippage, right?
Right.
So you can get a bad fill by a tick or two, hopefully not worse than that. And then you have commissions and exchange fees to deal with. So I think in terms of a real break even, right? So that, there's no financial impact. And that's kind of why I move it a couple ticks ahead of it.
Yeah.
Other than that, yeah, I mean, the other strategy, look at that point of control. What did I tell you? Oh
Nice.
my God, I love it. Another strategy, if we didn't get filled, was then you could start trailing your stop to, areas of interest, bottom of the value area, yesterday's low, 61.8. That kind of thing is if you wanted to be proactive and move it. But patience is good, man. Patience works sometimes.
Now, what's interesting is my alert just went off because where I wanted to go short is where you took profits. You know what I mean? So like literally around this area is where I want to go short.
Okay.
So let me, where is your ES there? It should be near VWAP. Yeah. So like, here's where I personally, wait, you have another, oh, so you have another unit there.
Yeah. US, we got in. Remember, we put that order in. I don't have my carrots there. Let me just add my carrots really fast. Data series.
So we had 2 units on at the time.
No, this is a different market. That was the Russell. This is the mini S&P. Remember,
That's
I said
right. I'm sorry.
I didn't want to do 2 indexes
because you don't want to be
I'm going to do them
overexposed.
right.
That's
So
right.
I take that back. I wanted to do it. This was
No, I got you.
So I did move my stop. We're right at yesterday's lows here. I have my target at the 61.8, just below that point of control again. And this is a good example of where, hey, there's a lot of meat on the bone right now. I got unrealized up here. I know past performance not indicative of future results, but there's areas that you could trail your stop up to. There's that bottom of the value area, which is, it's not a random area of interest. It's a real one, is an example. So again, if you're a trailer, that would be a good target. Or you could just hang tight and see if your target gets in. So
now
yeah.
I'm sorry there. Now this is a good question because this is something that I personally have on my charts, right? Voodoo in the chat is asking if you're not going to use ticks, maybe having a bar timer to count the time remaining on the bar. Now, something that the reason I have that on mine is so that I know, hey, cool, I've got a minute left before this bar closes where I need to make a decision, X, Y, Z. Now, the downside of that for me is I'm like, oh, there's about 45 seconds left for this bar to close. Let me just enter the trade, even though the bar has not closed below or above. That's the reason I use it, is so I know how much time I have, but that's also the downside of what gets me in the trade a little too quick. What's the reason you don't have a timer of how much bars?
I do. It's on the lower right of the chart. You see time remaining 5:37. And I used to, it's right down here. And
I see. Oh, I see it. Okay.
yeah, no, I do. And I used to make fun of it. Like people say, why don't you have a bar timer? So I added this recently, and it's really helpful to me, right? It's really helped me because then it reminds me of like little rules, like, all right, when this candle closes, and if we're above a certain percent, then I'm going to move my stop up, right? Some of the rules that I come up with ahead of time, then it's really easy for me to see. And I don't know if. And the other thing is, I'm careful not to get in front of certain things. So 10 o'clock East Coast time, that usually triggers a whole bunch of activity. You have hourly charts close, 30-minute, 15-minute, 10-minute, 5-minute, 3-minute, 2-minute, 1 minute. All these charts are closing. So all these different traders trading on different time frames leap into action at 10 o'clock. And as a result of that, you get this kind of weird velocity up and down, usually, not always, but you got to be careful. So I'd stay away from that. And I'd use the bar timer to help me remember how close I am to that point.
Yeah, no, that's definitely interesting. You're already up about 8 points on that trade there. Now I know we've got some CPI numbers coming up. What are your thoughts on that? Because that should create a lot of volatility this week, or to end the week rather. And it looks like you got some other things you're ready for as well.
Yeah, so I kind of charted out the rest of the year. We have 3 more CPIs. I was shocked when I was like, of course we have 3 more. It's a monthly number. We have a GDP Q3, big deal. We have 2 more FOMCs, big deal. And don't forget, the day before CPI is a PPI, so it's going to be a double dose of fun. But this CPI number, in my humble opinion, on the 13th, is going to be one of the biggest events that could really reset the whole conversation, either way, up
absolutely.
or down. So it's going to be fun, and be careful to trade in front of it. I would wait for this number to come out, because I think you're going to see either a tremendous rally or a tremendous break. I know that's not saying anything, but CPI is a big deal coming up this week.
Yeah, especially if we see inflation hasn't gotten any better, even after everything that we've done thus far. Then it's like, hey, where do we go? You know, I mean, we haven't seen any halt downs, you know, since 2020. And I tell the chat all the time, I have no idea what's going to happen, when it's going to happen. I simply trade intraday, and that's about it. I like my sleep. I'm already losing hair on the top of my head. I don't want any more stress. Because there was a time, Jim, where I'd wake up at 3 a.m. and I'd look at the futures because I've got puts on, you know, XYZ. And it's like, I can't do anything at 3 a.m., Jim, but I'm still stressing out and trying to predict where things are going to go. But anyway,
no, I know. And it's funny you should say that. There's a whole group on Twitter, Twitter traders, that at 3 a.m. you see all these tweets saying, anybody up? And then like 20 people are, yep.
Yeah, exactly. especially during the pandemic, because ain't nobody got a job at that point. They're all staying at home. They're all got their stimulus checks in the markets as well. And it was just, and, you know, school's out, this, that, the other. So, I mean, it was just a wild time where people are literally in Discord calls or whatever, just freaking out if the market just goes up a tick or two. Yeah. And they're like, oh, here it is. And it's like, bro, it's literally a point. But, you know, anyway, here the market's coming back just a little bit. And now what would make you go ahead and move your stop to break even on this one?
No, I just did it. I'm sorry.
Oh, you just did. Okay.
I did it right before we switched over that daily chart. I brought it up at that point,
and it's right above, like you said, just so you can save money on that. And I do have a question from Barry saying, is it a leverage trade or are you trading spot?
Highly leveraged. Futures trading is highly leveraged. So don't overdo those day trade margins, folks, even though you get plenty of day trade margin usually. You get plenty of leverage as it is trading futures. So it definitely leveraged.
I'm going to go ahead and ask this one last question here. What is your risk management? How much are you willing to lose on any given trade?
I don't have one. It's support and resistance.
Yeah. So for you, it's about the chart and not necessarily how much money you're going to win and or lose.
Yeah, and you want to be consistent on your targets and your stops when you look for support and resistance. And I agree, it can't be outrageous, right? It can't be an outrageous ratio. But pretty much when you use a 10-minute chart intraday, you're looking at trying to take a little bit out of the middle, you'll find some really good areas of support and resistance you could have a reasonable trade setup for.
And what about any pattern trading in terms of, like, are you looking for any bull flags? Are you looking for any wedges, double bottoms, et cetera, et cetera? Or is it like, hey, support, resistance, that's what I'm rocking with, period?
No, I mean, all that stuff is important for sure, right? All that breakout potential and what the momentum is when you're talking about wedges and triangle, ascending, descending triangles, double bottoms, triple bottoms. Those are, and we talked about the triple bottom in the Russell. That's for sure part of it, right? And I could, I'm so old, I could kind of see the chart and see where they're at. But and I don't want to overcomplicate the presentation for everybody, but absolutely those patterns are important for sure.
Yeah. Awesome. Well, look, appreciate you, Jim, for hanging out with us, but we only got about a minute here. Anything else that you wanted to cover before we head out? I know we mainly talked about e-minis and whatnot, but
no, the last thing on the events page, we have special shows in the middle of the day, and we have a couple special shows. Tuesday, tomorrow, 12 o'clock, we have this fellow by the name of Patrick Mullen from Gorilla Futures. He's going to talk about, he's a terrific presenter. Him and Tom Schneider are going to be doing this together for NinjaTrader, and he's going to be talking about trading the news. So that's kind of an exciting one tomorrow at noon if you go to the NinjaTrader.com/events page.
Awesome. Make sure you guys check that out. Thank you once again, Jim Cagnina, Senior Education and Training Specialist over at NinjaTrader. Thank you, pal.
Thank you, sir. Bye.